Now the important point of the question starts. The question says that to assess the working capital requirement, the following additional information is available. Now certain information is provided to us additionally, based on which we are required to compute the working capital requirement. The question is providing the information with respect to stock of raw material. It is equal to 2.25 months of the consumption. Work in process or work in progress is 0. Debtors, in that average collection period is 1 month, and so on. Further information is given. Now, how to make the calculation of the working capital requirement for a new company? Let us have a discussion for the same. Everybody is requested to pay attention. We are going to understand right now that how to make the computation of the working capital requirement for a new company. Dear students, working capital requirement for a new company will be calculated usually in this way. Step number 1 will compute the WIP, that is work in process valuation. In this case it is 0. Second working note, calculation of the finished goods valuation. Third working note, calculation of the cash costs of the sales. And fourth working note will make the calculation of the working capital. Why do we do answer in this sequence? I'll explain you that in the process of doing answer. If it is an existing company, how to do answer, that we are going to discuss slightly later on. So I request all of you to write down answer along with me. In order to compute requirement of requirement of working capital comma usually we will adopt following steps. In that write down step number 1, calculation of work in process. Second, calculation of finished goods. Third, calculation of cash cost of sales. And fourth, calculation of working capital. These are the 4 steps in which we will be doing answer generally. In this question, step number 1 is not applicable. So step number 1, calculation of WIP, in that write ignore. Step number 2, calculation of finished goods valuation. Let us have understanding that how to make the calculation of the finished goods. Friends, you may have a point like this, that said we already have calculated the finished goods. So are we supposed to say that is take the same value? The answer is no. We are required to prepare a different working for the finished goods valuation. Dear students, over here, the working capital requirement that we make over here is on cash cost basis. It means that we are required to compute the working capital ignoring any non-cash item. In a way, that's a basically the concept that we have is that say we are computing the working capital requirement so that say we can negotiate with the banker for the purpose of taking bank loan. That is the reason say we have say all this say the working to be made. So when we go to the bank for the purpose of obtaining the working capital loan, then in that case the bank does not accept this valuation of the debtors. This valuation of the finished goods. Why? Because the bank is having say a kind of argument that whatever the cost of goods sold, that is say cost of goods produced, cost of goods produced that say you have calculated, in that you have included depreciation. And basically depreciation is a non-cash item. So whatever the valuation that say you have done for the finished goods based on the cost of goods produced, which includes depreciation, is wrong. So you are required to do revaluation. In a way that say the cost of goods produced will be calculated once again without including depreciation. That is what we understand is the cash cost of the valuation. This is the way the finished goods are required to be valued. In case we were supposed to calculate the WIP, even in that case we are required to find WIP ignoring depreciation. Third, as far as the data are concerned, when you do the routine data calculation in the current assets calculation, it is based on the sales value. However, we know that the sales includes profit. So we are required to exclude the profit for the purpose of valuation of the debtors. Again, the bank is having said the same argument with you. That say, why do you require say any investment to be made for the debtors, that is say in terms of the profit? If at all you are purchasing the goods of, let us say, an amount of rupees 1500 and you sell it for rupees 1800, then in that case you require the loan only to finance the purchase, that is 1500, not to finance the sales value 1800. The same logic is applicable over here. That say as far as the data are concerned, the data are required to be valued on cost and not based on the selling price. So we are required to make the computation of cash cost of the sales. The step number 3 that I have dictated to you is calculation of the cash cost of the sales. Why? Because as far as the data are concerned, it is not required to be valued on sales because sales includes profit. So it will be valued on cost, and that too not the total cost. It will be that is valued on the basis of the cash cost. So first of all, I am writing answer for you, and then we will be writing a note for the same. Calculation of the finished goods valuation. It is year 1 and year 2. Cost of goods produced. It is 6 lakhs and it is 7,80,000. That includes depreciation. 6 lakhs and 7,80,000 minus depreciation 1,20,000. Again minus depreciation 1,20,000. So this is the way it is 4,80,000 and it is an amount of 6,60,000. So this is the we can say precisely it is the cash cost of the goods produced. Cash cost of goods produced. Now using this we'll compute the finished goods valuation. Dear students, the finished goods valuation means value of those number of units which are lying in the godown. That is what we have to understand. It is 4,80,000 divided by 6,000 number of units into 1,000 number of units. In the second year, it is 6,60,000 divided by production is 9,000 number of units and the closing stock is 1,500 number of units. This is the way. So the closing stock of the finished, that is closing stock of the finished goods, is valued at the end of the first year and at the end of the second year. So it is 4,80,000 divided by 6. That comes to rupees 80,000. For the second year, it is 6,60,000 into 1,500 upon 9,000, 1,10,000. This is the way we are required to make the computation of the finished goods valuation. So write down a note. This is an important note. First point, in calculation of working capital requirement, comma, we have to follow cash cost basis concept. So that is the first thing. That's we have to follow cash cost basis concept. Second point, it will be calculated ignoring depreciation and profit. Full stop. Third, depreciation is a non-cash item. Comma, so it is ignored in valuation. Full stop. Fourth point, selling price includes profit, comma, no investment is required for profit, comma, so debtors are valued on cash cost basis. This is what we understand. Step number 3, calculation of cash cost of sales. Let us understand how to find it for first year and second year. Already we have calculated cash cost of goods produced. This is what we already have done it. Now to this we will add opening finished goods. We will deduct closing finished goods, cash cost of goods produced plus opening minus closing, that is cash cost of goods sold. That is what we understand. Now simple, we will add selling expenses to compute cash cost of sales. For the first year as well as for the second year. Please take down this. So cash cost of the goods produced has already been found by us. It is 4,80,000, 6,60,000. It is 4,80,000 and 6,60,000. Opening finished goods for year 1 is 0. So 480 divided by 6 into 1. Closing stock is 80,000. So 4,80,000 plus 0 minus 80,000. So cash cost of the goods sold is 4 lakhs. Selling expenses are given 4 into 5,000 plus 12,000. That comes to 32,000. That is the selling expenses. Plus 4 lakh. So it is 4,32,000. This is the way cash cost of the sales will be calculated. In the second year, importantly, the opening stock will be taken as 80,000. Closing stock will be 6,60,000 divided by 9,000 into 1,500. It comes to 1,10,000. 660 plus 80 minus 1,10,000. So cash cost of the goods sold is 6,30,000. Selling expenses 4 into 8,500 plus 12,000, 46,000. That is the variable and fixed. Plus 6,30,000. So it comes to 6,76,000. This is the way cash cost of the sales will be calculated for first year and second year. Now after this, the most important working is going to start. That is step number 4. That is the most important working. Calculation of working capital requirement. Full stop. Now this is required to be calculated for first year as well as for second year. Let us understand how to do answer. So column number 1 is particulars. Second column is year 1 and third column is year 2. First of all, I am explaining the raw material, working capital requirement for the first year. Then I wish that for second year you do working on your own. So dear students, the working will be made like this. Stock of raw material. It will be calculated as raw material consumption divided by 12 months into raw material holding period. This is the formula which we are required to apply. What is the consumption of the raw material in the first year? 40 into 6,000, 2,40,000. Divided by 12 months in a year into raw material holding period is given to us as 2.25 months. Here it has been given to us. So into 2.25. So kindly use your calculator. 240 divided by 12. 20,000 into 2.25. That comes to 45,000. This is the stock of raw material. Next is WIP stock, which is 0 because it has been given it is 0. Next is the finished goods stock. We can see that the finished goods stock we have computed in our step number 2. It is an amount of 80,000. Next is the debtors. Now for debtors, usually we do annual credit sales upon 12 months into collection period. But instead of that, so this time what will happen? Cash cost of sales divided by 12 months into average collection period. This is the way we are required to compute the answer. Cash cost of credit sales. Cash cost of sales, it is cash cost of credit sales. Okay. As far as this example is concerned, the entire sales is on credit only. It is an amount of 4,32,000 divided by 12 months into average collection period is 1 month. So 4,32,000 divided by 12, it comes to 36,000. Next is the cash balance is given to us 10,000. So mostly all the current assets items are covered over here. Stock, all the three, debtors, finished goods, debtors and cash balance. Advance tax may be given, but over here we have to ignore tax. Prepaid expenses may be given, but over here it has not been given. Then we will write creditors for raw material. Dear students, over here, the question says that the creditors for supply of raw material is 1 month average purchases. So basically over here, we understand that the formula is like this. Annual credit purchase divided by 12 months into average payment period. This is the formula that we are required to apply. Now what is the purchase? We understand that the purchase is calculated as closing plus consumption. So we get the credit side total minus opening stock. So the difference on the debit side is purchase divided by 12 months into average payment period is provided to us as 1 month. This is the way we are required to show the answer. Now what is the closing raw material stock at the end of the first year? It is 45,000. So I am writing over here 45,000. Plus consumption of the raw material, it is an amount of 2,40,000. Minus opening stock is 0. Whole divided by 12 months into 1. That does not make a sense, but just I am writing it into 1. So I request all of you to use a calculator. 45,000 plus 240 minus 0 is okay, divided by 12. That comes to 23750. This is the way it is calculated. So basically the formula is like this. Annual credit purchase of the raw material divided by 12 months into average payment period. Now how this value is found? It is closing plus consumption minus opening. That is the way the purchase is found. Friends, we have seen like in this raw material stock account, consumption plus closing minus opening. So the balancing figure is purchase. That is what say we have already derived a formula like this: closing plus consumption minus opening. Okay. After creditors for raw material, we will be having creditors for expenses. We can see that the language of the question speaks that the creditors for expenses 1 month average of all expenses during the year. So we will mention like this: direct wages plus manufacturing expenses plus administration expenses. Like that, so we'll compute the total expenses plus selling expenses. Whatever the total that we compute, divided by 12 months. Into average payment period. This is the way we compute the answer. What is the amount of the direct wages for year 1? So direct wages and variable expenses of year 1, 1,20,000. Fixed manufacturing expenses 72,000. Depreciation will not be considered because it is a non-cash item. Fixed administration expenses 48,000. And as far as the selling expenses concerned, we will take total 20 plus 12, that comes to 32,000. So in year 1 it is 1,32,000, sorry 1,20,000 plus 72,000 plus 48,000 plus 12,000, sorry 20,000 plus 12,000. So these are the total expenses divided by 12 months into average payment period is 1 month. So I request you to use your calculator. 1,20,000 plus 72,000 plus 48,000 plus 20,000 plus 12,000. 2,72,000 divided by 12. 22,667. This is the way the creditors for expenses are calculated. Now friends, we have got the sufficient the details to compute the working capital. So I request all of you to use a calculator. So 45,000 raw material, 80,000 is debtors, sorry finished goods, 36,000 is for debtors, 10,000 cash balance, minus 23,750 creditors for raw material, 22,667 creditors for expenses, and based on that, so we can compute the working capital. It is 1,24,583. This is the way we compute the working capital for year 1. Whatever we have done for year 1, similarly we are required to do for year 2. I request all of you to complete the answer for year 2 and put your answer in the chat box. Let us see how to compute the working capital requirement for the second year. Again, we will start with the consumption of the raw material. It is 9,000 into 40, 3,60,000. That is consumption of the raw material. Divided by 12 months. Into 2.25 months. So 3,60,000 divided by 12 into 2.25. That comes to 67,500. WIP, it is 0. Finished goods stock. Again that we have computed earlier in step number 2, 1,10,000. For debtors, again cash cost of the credit sales, that is an amount of 6,76,000. Divided by 12 months. into average collection period of 1 month. So it is 56,333. Cash balance is 10,000. Creditors for supply of raw material, in that the closing stock is 67,500. Plus consumption is 3,60,000 for the second year. Minus opening stock of second year is equal to closing stock of the year 1 and 45,000. So 3,60,000 minus 45,000 whole divided by 12 into 1 month. That is the way the creditors for supply of raw material is calculated. So the closing stock 67,500, consumption is 3,60,000, opening is 45,000. So 3,82,500 divided by 12. So it is 3,1875. Okay. Creditors for expenses. In that, say first of all the direct wages. It is 20 into 9,000. It is 1,80,000. Plus 72,000 as it is. That is, so the fixed manufacturing expenses 6 into 12,000. Plus depreciation 0. Plus fixed, that is administration expenses 48,000. Plus fixed selling expenses 12,000. Plus variable selling expenses 4 into 8,500, that comes to 34,000. That is the way the total expenses are calculated. 180 plus 72 plus 48 plus 12,000 plus 34,000. It comes to 3,46,000. Divided by 12 into 1. So it comes to 28,833. Okay. Now based on this, we can make the computation of the working capital. So kindly use a calculator. 67,500 plus 0, that's okay, no problem. Plus 1,10,000 plus 56,333 plus 10,000 minus 3,1875 minus 2,8833. So working capital is 1,83,125. This is the way the working capital is calculated. I am just rewriting this creditors, that is for expenses. I am writing once again over here. 1,80,000 plus 72,000 plus 48,000 plus 20,000 plus 34,000 whole divided by 12 months into 1 month. This is the way we are required to make the calculation of answer. And we compute the amount of the creditors for expenses 2,833. And here is the working capital requirement that we have for the first year as well as for the second year. So let us have a summary for the second part of the question, because the question is very lengthy. So we have split that. The summary of the first part is done. In the second part of the question, we are required to compute the working capital requirement, in which we understand there are four things to be done. First is calculation of the WIP, second is calculation of the finished goods, third is the cash cost of the sales, and fourth is working capital. Step number 1, ignore because it is not there. Step number 2, finished goods valuation. Whatever the normal valuation that say we have, in that say we include depreciation. But since depreciation is a non-cash item, so it is excluded over here. For closing finished goods valuation, that is the number of units that we have produced but not sold at the end of the year. See, we have to visualize that say when we prepare the balance sheet at the end of the year, at that time, what are the current assets and what are the current liabilities. That is what say we have to keep in our mind. Second thing that say we understand that say we are going to approach working capital, that is say the bank, for the purpose of taking loan. So the bank does not recognize the normal finished goods valuation which includes depreciation. That is the reason so we will exclude depreciation for the purpose of calculation of answer. Okay, so cost of goods produced is calculated, and based on that we have computed the finished goods. I have that is dictated importantly a note to you that WIP valuation, finished goods valuation will ignore depreciation. Debtors valuation will ignore, in that say we will subtract not only the depreciation but also the profit element, because the debtors are generally valued on the sales value and the sales includes the profit, and we understand that say we do not have to make any investment for the profit. For that I have dictated an important note to you. Third step is basically for the purpose of correct valuation of the debtors, that is cash cost of the sales. Cash cost of the goods produced plus opening minus closing, based on that say the cash cost of the goods sold is calculated. To that selling expenses are added to compute the cash cost of the sales for first year as well as second year. In the last step, working capital requirement will be found. In that say we start with the stock of the raw material, that is consumption, divided by 12 into holding period. Finished goods stock as it is. In case of the debtors, it is cash cost of the credit sales divided by 12 months into collection period. For the first year 432, for the second year 676. Cash balance simple 10,000 rupees that we are going to keep at the end of the year. Creditors for raw material, in which we are supposed to compute the purchase, divided by 12 into average payment period. Purchase is calculated as closing plus consumption minus opening, divided by 12 into 1. Now what is closing for the first year? We already have found it, 45,000. So 45,000 plus 2,40,000 minus 0 divided by 12 into 1. For the second year, the closing stock is 67,500 plus consumption is 3,60,000 minus opening. Closing at the end of year 1 is opening of the second year, 45,000. Accordingly, the purchase is calculated, divided by 12 into 1. Creditors for expenses, it is all expenses total divided by 12 into 1. That is the way we make the computation of the creditors for expenses. That's it. Current assets minus current liabilities will give working capital for the first year and for second year. Very similar to this kind of the question the institute has kept in its publication. So there is a possibility that this kind of question can be asked in examination for mostly 10 marks.